This is a Crypto Legends podcast.
Hey everybody, this is Sophia Shluger from Fiat Republic, and you're listening to the Crypto Legends, the show where we meet the legends and creator of crypto and Web3. Today we have the pleasure of having my friend Sophia Shluger on the show. Sophia is a leading voice in the digital asset space for institutions and family offices. Sophia has been at the cold face helping institutions make the leap from Web 2 and the world of traditional finance to Web 3 and the world of DeFi. She has always advocated for bridges between Web 2 and Web 3, and today she will expertly guide us through the current challenges and future opportunities of digital assets when it comes to institutions and family offices. To start with, Sophia, could you tell us a bit more about you?
Absolutely. Thank you so much, Sophie, for having me today. It's a pleasure to be here speaking with you. My name is Sophia Shluger. I'm the managing director in Europe here based in London for Amber Group. Amber Group is a global leading digital asset company that provides a full service of digital asset services that spans everything from investing, financing, trading, and spending. And what's unique about us is that we combine our best-in-class technology with sophisticated quantitative research to offer a seamless digital asset experience to all of our global clients. So that's a little bit about us, and I'm sure I'll have the opportunity to tell you more later on.
Yeah, absolutely. So over the past year, basically, you have developed quite strong relationship with institutional and family office. You're a bit the queen of servicing family offices when it comes to digital assets, and that happens to be today's topic. My first question to you would be to understand, like, from your perspective, why are digital assets becoming increasingly attractive for institutions?
Yeah, it's a great question. And as you rightly say, I'm sort of focusing on the private wealth management advisory side of our business. I mean, our goal is really to democratize financial services by giving our customers the best technology available and enable everyone to build their digital wealth seamlessly. And so on our flagship digital asset platform called WhaleFin, our clients are able to access liquidity, earn yields, and mitigate risk. So why is this attractive for institutions? And we have increasingly seen many come and participate in the market. And I think that's because crypto combines the growth potential of a new technology with the market inefficiency of a new asset class. And so what that means essentially is that there's a lot of different market opportunities that can be exploited. Financial technology, if you look historically, has always adapted to meet the needs of what is an increasingly complex and interconnected society. And I think we can all agree that digitization is one of the most important themes of our generation. And we've seen a lot of the generational shifts as well with digital natives who are born into society already connected to their devices, shopping on e-commerce, socializing and engaging with brands and companies and their friends online. And so this is just, again, a sort of the path of progress, as I would say, with the evolution of value and how to transmit value. So I think, if you think about some of the existing players that are out there, the ability now that with this technology underpinning this new industry, you're able to borrow and lend with or without credit, something previously was not possible. Now you can invest and trade assets with no centralized listing authority. That's more on the DeFi side. And now we have, digital stable coins, basically, that provides 24/7 access to instantly settled US dollars for anyone with an internet connection. And so it's just, again, it harks back to progress in terms of the evolution of how, we transmit value and how we can leverage technology to better suit the needs of our future society. On the family office side, as you rightly pointed out, I have been focusing on that segment. And interestingly, there's a lot of data showing that family offices are interested in getting more involved in digital assets, but a lot of them are still on an educational journey to understand all of the new opportunities that exist in the space. So I'm happy to tell you more about that. But generally, the reason why we see institutions coming in is because there's a lot of growth potential and there is a growing consumer base that's interested in utilizing this technology to transmit value.
Yeah, I couldn't, of course, agree more. Like with the potential that it represents as like a diversification strategy of their investments. In one of our previous conversations, you mentioned that some institutions put 100 to 200 bips in Bitcoin as part of their diversification strategy. I would love to know how much does the most bullish institution you know put into digital assets?
Yeah, it's a great question. I mean, I've even heard from some of the venture capital community that they've been having, constructive conversation with some pension funds that are already considering allocating, 10 basis points, which is not much, but when you think about the size of those funds, it can be quite significant. So the idea is that institutions are taking the time now to learn and try to understand the market. So we did publish a Crypto 101 primer that basically did a survey of a lot of the research that's out on the market from various financial institutions. There's different financial models, such as the Black Litterman model, that suggests 5% as a good starting point, whereas other research has pointed, for example, Kaya put out a report that said, allocating within a diversified portfolio, 60% equities, 40% fixed income, if you allocate about 100 to 250 basis points towards BTC, this high beta alternative asset, you'll actually improve risk-adjusted returns by about the same amount of margin. And in that research, they do suggest that, given the characteristics of volatility in the asset class, anything above 5% perhaps could consume the entire portfolio. So I think the sweet spot, again, it really just depends on an investor's sort of risk appetite and their investment mandate. But, I think consistently seeing, 2% allocation to crypto or BTC in particular as part of their alternative assets bucket makes a lot of sense. I've spoken to many family offices that choose to get synthetic exposure via ETPs, 50 basis points in an overall portfolio. But again, it really just depends on each institution and what they're looking to achieve in the portfolio.
Yeah. I always love how data-oriented you are. So here is some data for you that I would like you to interpret. It has been quoted recently that only 1 in 5 family offices is invested in crypto. There is a bigger proportion, 77%, according to a survey, exploring crypto. What is your experience of family office involved in crypto? What's their current sentiment and actions and behaviors? Can we just deep dive a bit more and unpack what you just mentioned to really get like this family office perspective?
Yeah, absolutely. So as I just alluded to, I had spoken to family office that had 50 basis points of synthetic exposure. Some of them don't have long-term directional views on BTC. They're just using it as a beta component in the portfolio. And so, with the market depressed at these levels, perhaps they're not, accumulating more, waiting to see how the market will play out. One thing that's interesting to note is the next gens, are really interested and they understand this asset class and the market. They're actively trading on different platforms. And so they're sort of leading the charge in terms of educating principals and the older generation about the benefits of obviously getting exposure to this asset class, which now is, roughly 1 trillion market cap. So it's one of those things where the way we think about it is you're not allocated towards digital assets or crypto, you're under allocated in the global asset class. So again, it's really dependent upon the institution, but I would say one of the most important themes that I've witnessed and in conversations with principals and next gens is there is a generational divide. And again, I think that, comes back to education. Education is something that we take very seriously at Amber Group. Obviously, we've been in the market since 2017 officially. And so at any opportunity that we can, we'd love to, walk clients through an understanding of how the market is set up, the different dynamics, different inefficiencies that can be exploited, and obviously, any trading ideas that make sense. So, I think given the market conditions now with a lot of the macro headwinds, we'll have to see how things evolve. But generally, everyone is sort of paying attention. It's just a question of whether they're taking the time to really inform themselves and get up the curve. Because as you know, the market moves incredibly quickly and it is a steep learning curve. So it's about making that commitment and really understanding and dedicating the time to realizing and uncovering the opportunities in the space.
Yeah, like taking the time and like being able to really see how it can add value to your portfolio makes so much sense for them. As a follow-on question, so like here we are talking about like investing on crypto and like making opinions on how your portfolio should be actually diversified. Now, I would love to understand, based on your discussions with them, are they more interested in CeFi as opposed to DeFi, or is it actually a much more balanced belief?
Yeah, fantastic question. And I'm probably, you're not going to be surprised to hear that the balance is more on the CeFi side, centralized finance, just because DeFi is a much greater departure from what they are accustomed to in terms of the market dynamics. So I think, bringing in the TradFi community, the institutions into the CeFi world where, they have customer service, there is a counterparty, it's not decentralized. It's more palatable or understandable. Obviously, there's a lot of different dynamics related to crypto asset trading. Custody is one that's very important. So again, depending on the institution and what their requirements are for custody, they can work with different institutions that offer, full custody or self-custody. So those are I would say, the components that are really top of mind for institutions as they think about, counterparty risk, and also the setup in terms of how they will be transacting, settling, and custodying their assets. I think one other thing I would mention is just on the DeFi side, we're seeing a lot of innovation there, and that's phenomenal, a lot of growth in total value locked, et cetera. But at the end of the day, I think DeFi still has a lot of work to do in terms of the UX UI to make sure that it's sort of customer friendly. And I think there's a lot of different solutions and companies building towards improving that, including some of the more prominent DeFi players. So I think the way into this industry is really mostly through the CeFi channels.
Yeah, it's kind of like, anyway, a step by step approach, isn't it? Like a few years ago, like they were not looking into crypto. Then like it's about like finding the right way to do it, the easy way to do it, and hopefully like in the next few years, well, DeFi will be just better UX, as you mentioned, and then there will be more people daring to go into it.
Absolutely.
Another point I wanted to touch upon is ESG, because it continues to be an increasingly growing factor in investment decisions, especially for family offices. I would love to get your perspective. How are crypto platforms that focus on family offices helping balance their need for ESG with return and profits?
Yeah, wow, that's a very specific question. I mean, I think I could speak very high level and obviously come from, what we're doing and focused on. So actually, Amber Group, last month was awarded the most sustainable digital asset platform by World Finance. So that's an accolade we take very seriously. And I think, one thing that the community needs to understand is that actually, because of, the mining requirements for crypto assets, there's actually been a renewed or a greater focus on renewable energy because of, the consumption that has been required and will be continued to be required for, proof of work, mining. So in that sense, it's interesting because I think we're actually accelerating adoption of renewables and we're bringing that conversation to the forefront. I think a lot of individuals also don't realize that about 57% of mining is off of renewable sources. And so what's great about it is, this is a market that is basically looking for the most efficient means to use energy. And I think we're actually really, pushing progress forward in terms of renewables in that regard. I mean, just look at Ethereum with the merge that's currently in process, moving from proof of work to proof of stake. And so we have to remember this is a nascent industry. It's only been around for, over a decade, and we're trying to find ways to be more sustainable. At least at Amber, our mission is to make our digital future a reality and shape it to be fair, inclusive, and kind. And I put ESG as part of that. I mean, we have, through a partnership with Moss, bought 2 million worth of carbon credits to offset mining. We also have a partnership with the whale and dolphin conservation, where we've adopted several whales in the Pacific Ocean because of the importance that they play in the maritime ecosystem. So there are ways to be very, let's say, sustainable and ESG focused, particularly because, these assets are digital. We don't require, retail bank branches. And there's actually a lot of costs associated with, moving money in the more traditional way, with bricks and mortars, retail front banks. So again, I think we have to take all of that into perspective. But the last thing I'll mention on ESG on the social side is the incredible opportunity for financial inclusion that digital assets, supports. So anyone who has some startup capital and an internet connection can, lend and borrow on different platforms. They can earn yields, passive income strategies. And so, we're actually innovating and trying to progress society forward by making available these asset classes, these coins and tokens that allow people to have a much better right to self-determination for their financial future. So it's a very complex and broad topic, but the good news is there's some very positive silver linings in all of it.
Yeah, absolutely. And I think it's definitely initiatives like crypto platforms such as Amber communicate about, but it's still, I think, not reaching the masses in terms of communications. You know what I mean? Because you will talk to someone that doesn't know so much about crypto or just starting looking into it. They will have heard, oh, my God, mining is just so
energy intensive and bad for the
energy intensive. And actually the data that you just gave, 57%, is quite astounding. And this is definitely this kind of data that we need to see more in the public to be able to drive more adoption.
Absolutely. I mean, I think the perception is, the early days of crypto with the rodeo of Silk Road, we've come a long way from there. Obviously, there, with any new industry, there will be bad actors. There will be things that need to be, improved upon. But the good news is that there is money and focus and a commitment to make things better. And so it's very exciting, and I'm looking forward to see how things evolve.
Cool. Let's now talk about the current market. We have seen many spectacular collapses of crypto platforms in the recent months. What impact do you believe crypto winter has or will have on institutional and family office involvement in digital assets? Have you already seen some things happening in your discussions? Is it more a play of they are waiting and seeing, or maybe there is no impact at all?
Yeah, no, it's a great question. And I think, it's so complicated now because of all the macro headwinds, whether it be, double-digit inflation in most parts of the world, rates that are, rising, perhaps not strong, quickly enough to combat, the consumer expectations around inflation. There's geopolitical factors at play. We've just come out of, a pandemic. So many different things at work. Obviously, I think with any sort of, down move of this size in markets, people are going to be spooked and have a risk-off trade until we start to see better data. So, I mean, the answer is yes, people are sort of sitting on the sidelines at the moment. But again, it's one of those standard things in trading where it's you have to be greedy when everyone else is scared, right? You don't want to be buying at the peak. You want to be buying, when asset prices are depressed. And so I think the good news is people are taking the time to do the work and to learn more about it now. But I think in order for us to see, that segment of the market come back in size, we're going to have to see some more positive macro indicators or some sort of, industry-specific catalyst that will start to interest them. I think, generally speaking, and we'll talk about it more on the regulation side, but I think everyone around the world is thinking about, the retail market and consumers and ensuring that they're protected, because what we don't want to have is to have a massive, crisis and contagion risk that's significant across, the retail market in particular. So everyone is, still taking a close look, but I think they're on the sidelines for the moment until we get more positive data or sentiment.
Yeah. I believe many, they are not the only ones, and it doesn't concern crypto only, as you very rightly mentioned. You just touched upon regulation. I was curious to know if there are some regulations that you think you would bring reassurance to institutionals to get greater exposure in digital assets. Is it something that come across the discussions you have with them, or actually not at all?
Yeah, no, absolutely. And we are a regulation first institution. We have our licenses in various jurisdictions around the world, and we actively work with regulators to help shape policy, but also ensure that, we are, working in the most compliant way. So, I mean, regulation is key, and I think we are going to see more of that. The industry welcomes that because then there's greater clarity on how we can operate. And it's very jurisdiction dependent. So I think you're seeing kind of, certain parts of the world really tighten, particularly with that retail market in focus. But generally speaking, central banks around the world have been exploring and experimenting with digital currencies, so the CBDCs. And here in the UK, for example, the Treasury some months ago came out and said they're working towards, they're going to recognize stablecoins as legal tender. They want to make the UK a crypto hub, So, we have to see what the subsequent messages will be. That was, during the bull market. But generally speaking, this is all off of the back of the fact that, as you say, the correlations between crypto and other asset classes, such as equities, have increased. And regulators are very concerned to make sure that consumers are protected. So I'm not a regulation expert, but I think we'll have to wait and see what new policies are put forward. And obviously, when that happens, we will be actively working with them to ensure that our services are within the spirit of the regulatory frameworks.
Yeah. You're mentioning UK or GBPC stable coins, and it's quite interesting. We actually got some of our banking partners reaching out, asking us like if there was an interest from our clients recently. So it's definitely moving, and what's really good to see is that it's moving from not only like regulator perspective, but from the doers, right? And
Yeah.
so like I'm very much looking forward seeing this, like, because if in the end like the applications by those guys is kind of the same of what happened with open banking in the UK versus Europe, is going to certainly be very exciting, because of course, like, open banking right now is very much widespread in the UK, while in other countries the adoption hasn't been as fast due to actually the legacy banking systems.
Absolutely. And we see some, sovereign nations, El Salvador, Venezuela, we see them adopting Bitcoin, as, legitimate currency because of, country specific institutional issues. And so again, it's, there's an uneven balance of jurisdictions and countries that are sort of crypto forward and others that are still, educating themselves and trying to put forward their policies.
Yeah. In the current market, we have heard a lot about, or I believe you probably have heard about it, the best companies are building currently. What products do you believe we will see as the market recovers?
Yeah, absolutely. And that's one of the, silver linings benefits of a bear market, is that people sort of, tend to focus, put their heads down and get to work on building. So I'd say, some of the things that I would anticipate seeing is like scaling solutions for on-chain activity, whether that, is new layer ones or the release or improvement of, a lot of layer twos. I think, at the end of the day, transaction speeds are still quite low or for what the industry aims to achieve in terms of universal adoption. And so any types of solutions that alleviate or, eliminate a lot of the bottlenecks that we're seeing, and improve sort of the throughput and latency of distributed ledgers, I think that is an area that, we're going to see a lot of new products and solutions. So, cross-chain interoperability, anything around sort of, zero knowledge proofs is something as well that's been, kind of a focus in the industry, just improvements there. But basically, I would say also, with the advent of Web3, which is something that we're actively involved in building infrastructure for a platform called Openverse, which is launching in, the third quarter to basically help businesses, creators, and brands migrate from Web2 to Web3. I think, seeing some changes in gaming, whether it's, going from play to earn, improvements there, or even seeing, gaming applications that have more of a sort of sports betting, wagering type, real financial and economic opportunity. That's something also to keep an eye out. But again, I think it really just depends on, what part of the market you're focused on. Generally speaking, the consensus in the market is that like digital identity is going to be imperative for how consumers navigate, their Web3 lifestyles. And so, that's obviously one of the benefits of decentralization, is that, that can help push that forward, particularly, given blockchain and tokenomics. I think, we all in Web2 understand the challenges that we have in terms of like controlling the data that we have. I mean, so much of that has been offered out for free for businesses to monetize. How many times have we forgotten a password or had an account hacked? So the ability to use, a uniform, universal digital identity to be able to like, sell it onwards to companies or revoke access, monetize it as you choose, it's going to be really important. So that's something that I think a lot of people are working on. But at the end of the day, it's not just, and this is interesting, it's not just about your own identity, but if you think about like Internet of Things and all interconnected devices, these devices are going to need to have digital identities, and the way in which, we're going to be able to manage our identities across platforms, across chains, seamlessly without data breaches, and having none of that information compromised. I think that is, something we're all very excited about. And so that's one thing that I would point out, definitely look for that. Hopefully we can find a solution that works.
You were mentioning about the importance of security, and it's something that I actually wanted to touch upon. So in August 2021, Polygon was hacked and lost 600 millions to hackers. How important are security solutions going to be to create the safe environment needed to unlock more institutional investment in crypto? Can we dig a little bit more into it?
And that's a fantastic question. And yes, I think we absolutely should. I mean, it's absolutely vital is the answer to it. I mean, I think given what we've seen in the bear market, we've seen, unfortunately, some incidents and institutions that, have not managed risk appropriately or perhaps didn't have the right business model. We need to improve upon our security measures because, again, at the end of the day, when you transact with a financial institution, it's really a trust relationship, and trust takes time to build. And obviously, with the new industry, with all these new companies and platforms, that's something that is imperative. And so, finding solutions or institutions or products that can help us accelerate security is very important. At Ember, we work with the best third parties in their respective areas, whether it be, on the wallet side, the tech infrastructure layer for wallets, or, even insurance products. So there's multiple ways in which to tackle it. But as you said, it's absolutely imperative. And I do believe we are going to see improvements in that space.
Thank you. In our Crypto Legends episode, we always like to look at the future. So I would like to get your thoughts on a few points regarding the future. When it comes to family offices, do you think they will be the next iteration of the digital economy? How do you think they will be involved in getting part in this crypto revolution? We discussed where they were right now, but
Yes.
where do you see it going? Let's say 10 years down the line.
Yeah, no, it's a great question. I mean, depending on which sort of survey you look at, there's estimates that family offices have some exposure to crypto or digital assets, in the 20 to 30% range, depending on, what part of the world. But a lot of that can be, it's not like spot exposure to Bitcoin or some altcoin. It's really sort of, they're allocated as an LP into a venture capital firm that is focused on blockchain technology or crypto. So, I think going forward, again, because there's more flexibility generally on their investment mandates, depending on the institution, I imagine we will see them start allocating crypto or digital assets into their alternatives bucket. I think we'll have to see a lot of the sort of large private banks start to acknowledge digital assets as part of the alternative asset class. That's something that we don't see uniformly yet. I think there's going to be a lot of participation in Web3 in the metaverse. That's several years away in terms of a full-fledged functioning, a metaverse that people use on a daily basis. But again, the investments are being made now, and I would imagine that they would not only be investing in digital assets as an LP in a fund, but also owning it outright, lending it out, earning passive incomes, but also participating in the metaverse. And that's what's so exciting about Openverse, which we're launching, is the fact that we will have all of the capabilities and tools and experiences available to our clients who want to get involved in DeFi, staking or NFTs or the metaverse generally. So it's too early to tell, but I anticipate that absolutely as time goes on, as the generations shift, we're going to see more and more activity across just a number of different areas.
And so, like with such a bright future ahead, what type of institutional service providers and tools will increase accessibility to digital assets for institutions?
Gosh, there's so many different players involved in sort of just the traditional asset classes. I mean, some that I referenced earlier, like the custody side, obviously trading platforms, banking rails, payment systems. The list goes on and on. And so I would just say that, without naming every single one of them, anything that you can imagine that we have in the traditional asset classes, we will see replicated or created for digital assets. And I think another important point to mention is that, traditional asset classes, real assets, whether it be commodities or real estate or equities or bonds even, all of that will be tokenized and brought on chain. It is a more efficient way to transact, and it allows for, a more seamless, more transparent, trading. So I anticipate we'll see everything replicated. And the question will really be whether crypto native firms are the ones to sort of create those solutions, or if we're going to see more of these traditional TradFi institutions kind of come into the blockchain space and create, their solutions in a Web3 world. So that remains to be seen. But the good news is there's a lot of focus on it, a lot of investment happening. And hopefully, all of that will be available to everyone very soon.
Thank you so much, Sophia. I really, really enjoyed the conversation. It was great to have like this deeper look into actually what institutions and family office are currently doing and what they want in the future when it comes to crypto and CeFi and hopefully one day DeFi. Yeah, so I really hope our audience will enjoy this episode, and I hope to also see you soon in another episode on another topic. Have a good day, everyone.